Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we have a very different and exciting episode for you guys today, bringing in someone internally for a conversation about the state of the market. We have our VP of Research, George Calle, joining us on the other side of the mic to talk about our end-of-year report that the research team has been working on for, I guess, probably a quarter or so. It's been, I every time I have a new request or an ask from someone on that side to make a chart or do something, they tell me they're too busy, that I have to do it myself because they're up to their knees, or rather up to their neck, in this report. So I'm so happy it's done, because now whenever I bother you guys, you'll have some spare time to indulge me in various requests. But appreciate you taking the time.
For sure. Thanks for having me. Excited to talk about what the team's put together. As you mentioned, it's definitely been always a bit of a bear to put together a 200-page report. So glad the team has stayed diligent about all those data requests.
So we obviously kind of took a different approach this year. I think maybe we can start there, right? Typically or historically, we've been doing this, I think, for 3 years, maybe longer. The report had kind of taken a shape or a form that was almost a bit more standard, or like it was very much a rigid type of overview of the market. This year, you tried to make it a bit more dynamic and really reflect the times, rather than sort of try to, put squares into square holes. So walk us through that. What sort of, what should people expect, and how is it maybe different from years prior?
Yeah, for sure. I think the biggest change was mainly around the mindset we took to writing the report, which was really about thinking about the unique things that happened in the year, and the way in which I think in 2023 we realized the interconnectedness between macro institutions, regulation, development of blockchain platforms, and their evolution from a scaling and adoption perspective, along with the use of applications, whether they're DeFi, NFTs, now social payments. So looking at it from kind of a holistic perspective. So the way we decided to cut it up was starting with looking at the broader prices of cryptocurrencies over the past year, coloring that with how they've performed in the context of the macro environment, and then taking that and looking at what market infrastructure has been used for the facilitation of capital into the sector, across both trading, whether that's spot or derivatives, along with then private investments, and the different ways that investors have allocated over the past year. And then moving a little bit more into the blockchain platforms that we've seen have the most success. Obviously, a lot of that in recent weeks has been very relevant to price. We've seen a lot of activity on Solana, for example, which has generated kind of a virtuous cycle of price appreciation of Sol, and then kind of more users coming back into the ecosystem. So unpacking, what has happened across Ethereum, other L1s, and where we're kind of seeing leaders, and then ending by looking at who we see using applications, what's gaining more prominence in a higher rate environment, an environment where we're increasingly going multi-chain, and for what purposes are those people using crypto applications. So that's kind of the broader way we decided to cut it up this year.
So reading through the 200 pages of the report, kind of playing the pivotal role in its development, how would you define the year 2023 from a crypto perspective? If you were to break it down into, let's call it 3 points, is it institutional adoption? Is it the rise of Sol? Is it What are some of the big brushstrokes you can make?
Yeah, it's a really good question. I think there are a few things we've noticed. Crypto has actually become really multifaceted. So, it's hard to summarize things in kind of one trend. But the big things that stood out to us were, one, prices went up across the board. So, Bitcoin was up around over 150% now. Ethereum, close to up 100%. Solana, as you mentioned, is up over 500% now. Total crypto market cap is roughly doubled. And this was not what a lot of people expected going into the year. We came into the year after 2022, where we had already had a bunch of rate hikes. It was projected the Fed was going to continue to raise interest rates, which they did, all the way through July. And especially given seeing like the market carnage of 2022, a lot of people expected, either more shoes to drop or just broader, other
Stagnation.
sectors of the stagnation and, maybe crises elsewhere kind of seeping into the crypto markets.
It's interesting, right? Once you sort of get into a certain mental framework or the market enters a certain cycle, it's so hard to sort of see beyond that which is existing around you. So that's probably another trend we can unpack. Was there a degree or any insight into the degree to which people were sidelined from the moves that we saw in the previous quarter? Was that a defining sort of touch point?
Definitely. I mean, it's always a bit tricky to look at, how much capital's in the system, but two metrics we like to use are stablecoin supply and volumes. Despite price doubling over the past year, stablecoin supply is down over the year, and volumes have remained relatively flat. They've spiked in the past month, but through most of the year they were relatively flat. So that probably does indicate some element of people being sidelined. And kind of going back to some of these crises, there actually was an external crisis in March, the banking crisis. But that actually, it drove up volumes, particularly on chain, in March around, the brief depeg of USDC, but it actually didn't meaningfully impact crypto asset prices overall. There was a brief decline, but we've retraced relatively quickly.
Got it. Maybe we can focus on sort of the narratives being shaped around scaling. How would you describe 2023 when it comes from the way in which these various blockchain networks are trying to scale? What are some of the key takeaways from the report?
Yeah, so that was actually going to be the second trend that I think became really dominant this year, was scaling, but really at the heart of it was a debate between a modular versus a integrated or monolithic scaling approach. And so kind of modular being represented by the Ethereum community, really around delegation of execution optimization to external rollups, versus integration, which has gained a lot of mindshare recently with Solana really taking off. So, starting on the modular side, I would say, when you think about how Ethereum and other, multi-chain ecosystems or other modular ecosystems scale, there's kind of the principle of enshrined scaling, so making changes to the base layer itself. And then there's kind of adjunct, which would refer to, I would call more market-driven solutions that are built on top, or below, however you want to visualize it, the base layer. So most of the advancement, at least the advancement that we can really tangibly see in data, was around these market-driven solutions. So the most, I think, most clear example of that was layer twos. Saw a lot of adoption this year. So optimistic rollups, which have really just beaten zero knowledge rollups to market, have almost like tripled in value locked this year. Additionally, the most popular optimistic rollups, Optimism and Arbitrum, have both released their own open source stacks. So there's the OP stack and Arbitrum Stylus, which is a little bit later. But OP Stack has already seen Base and some other L2s build on top of it, which has really kind of accelerated the development of rollups on Ethereum. Meanwhile, zero knowledge rollups have progressed. Polygon, ZK, EVM, Linea, Scroll, released in the Q1, Q3, and Q4 respectively. And demonstrate some, early versions of ZK EVM with bytecode level EVM equivalents, which has been, a really promising development. We're still waiting on, more to be rolled out with Starknet, which a lot of people are excited for, which is a Cairo-based zero knowledge rollup. But aside from the rollups, I think what's been really interesting about this year is you actually see a lot of development around, other layers of the modular stack. So, one example of that is data availability, which we actually saw the first really large L2. It was Mantle, I believe. And they announced in July that they would be using Eigenlayer for off-chain data availability. So that really signals, a broader push towards using things other than the Ethereum base layer within the broader Ethereum ecosystem. Similarly, I know we've talked a bit about Celestia, which launched in November. Also, with kind of that data availability focus. So there's been a lot of development there.
So I think you delineated it quite well. There's sort of three main undercurrents to this, right? You have an emphasis or a strong focus on the pros and cons between modularity and monolithic stacks. That being one, you sort of have the growth and acceleration of layer twos between the ZKs and the optimistic rollups. And then the third part being sort of this really keen focus on data availability, which is sort of manifested right in to your point, the run up in TIA. Can you maybe like break down that third component? Why are people or why have folks been so keen, whether it's Eigenlayer or Eigenlayer, however you say it, so keen to sort of focus on data availability? Why did this become such a strong topic in 2023?
Yeah. The simple answer is data availability is just another expense that rollups have to incur. So by offloading that to a separate chain that's not Ethereum, they're able to save considerably by using one of those dedicated DA layers.
Got it. And so it's almost part of the growth of layer twos that this sort of emerged as an important trend.
Exactly.
If we were to have written this report, or if we were to write the report in the format that it's taking this year back in DeFi summer, that probably would have been part 2 or part 1. What's the state of DeFi now, and how was it sort of represented in the report? What tailwinds and headwinds are in that corner of the market?
Yeah, for sure. So it's a really good question, because we were kind of thinking about that internally. The way we structured it was really focusing on what are the emergent versus what is sort of fallen by the wayside, or at least just not seeing a lot of growth over the past year. And really what we identified was liquid staking and real world assets on chain. And so with liquid staking, I think people sometimes forget the drama around, or maybe it was more of a mini drama around staked ETH, which is the liquid staking derivative for Lido's liquid staking platform on Ethereum, which I think as of now, roughly 30% of all ETH that is staked is staked with Lido. So considerable percentage. And going back to kind of the market chaos of 2022, a lot of the bad trades were these arbitrage trades or like recursive leverage trades, like the GBTC arbitrage. And both Celsius and Three Arrows Capital, which were two of the first, trading desk / centralized venues to go bust, that was one of their largest holdings was staked ETH. Celsius was borrowing against staked ETH collateral on Aave, running a recursive leverage strategy. And so when those companies were filing for bankruptcy, there was actually a slight dislocation between the prices of Ethereum and staked ETH. And on top of that, a lot of people thought, with talking about a enshrined advancement within the Ethereum community, one thing we did have was the Chaparro upgrade, which one of the things that it allowed for was, since we moved to proof of stake in September of 2022, you could deposit stake, but you couldn't withdraw it. And so a lot of people thought, when Chaparro hits and you can withdraw stake in April, I think it was, of 2023, you'll see flows out of Lido. Maybe there'll be diversification, maybe people will stake on their own. But actually what happened was more and more money flood into Lido. I think $10 billion more capital sits in Lido compared to this time last year. And the reason behind that is the biggest fear, which is there could be a massive long-term deviation between staked ETH and ETH. Eventually, or kind of essentially went away with Chaparro. And so we saw liquid staking on Ethereum, particularly with Lido, do very, very well this year. But we also saw interesting developments on other chains. So Jito, for example, is a very Solana native liquid staking and also MEV type platform that is on Solana. And they've recently grown tremendously, actually just launching their token after being in production for, I think, around 2 years now. So there are a lot of interesting things on the liquid staking side.
Definitely. I think that's probably going to take up a fair bit of the report. Okay, let's shift gears just slightly. I want to unpack the degree to which, because I think this is almost one of the more fundamental defining characteristics of 2023, which was the extent to which crypto was impacted by macro. When we think about what was like how it was a surprising run up, it wasn't surprising in as much as if you look at any risk asset, kind of had a similar sort of rise. You look at different types of stocks like Duolingo or a whole wide range saw similar, double digit, triple digit percentage increases year to date. So there was definitely that. But how would you sort of walk us through the extent to which crypto markets mirrored traditional markets, and what was the impact maybe of rising interest rates on DeFi or crypto in general? But I guess to put a finer point to the question, without pontificating a bit too much on my end, how would you say the sort of macro environment impacted crypto? And then would you agree that sort of there was a mirroring there?
Definitely. I mean, I think we often think we're so unique, but if you look at a lot of broader economic data, it kind of shows, at least from a backwards looking perspective, that 2023 was a relatively positive environment for risk assets generally. Granted, crypto performed far better than broader assets. So I don't know what the S&P 500 has done. I think it's up around 20% this year, where crypto's doubled. But I think crypto has definitely moved both in its run up in 2020, 2021 with low interest rates. You know, it's not too surprising that the first interest rate hike was right before Terra Luna. And the Fed stopped raising rates, at least temporarily, in July of this year. And we saw our recent run up in coin prices most significantly in November and December. So I think there's definitely strong correlation, if not direct causation, of interest rate policy and asset prices, particularly in crypto.
Yeah, 100%. Obviously, this year was also defined by regulation, of course, but between sort of the anticipation for a spot Bitcoin ETF out of the SEC, as well as the agency's lawsuits against Binance and Coinbase. And then, of course, the sort of crown jewel of news for this year from a regulatory perspective was the DOJ settlement with Binance International. To what degree, walk us through sort of the shifting exchange landscape and how sort of that's tied to regulation. Maybe we can start there.
Yeah, it's a great question because I think on one hand, we've seen almost two very different postures from like a regulatory, or maybe outcomes from like a regulatory and institutional perspective, which I can kind of touch on a little bit. And then also, I think, when we talk about regulation, sometimes we also overestimate the impact of regulation on things we're seeing in the market. So, I'll kind of start with some of the bad, maybe. So, the year started off actually with, I think it was like January 3rd, or at least sometime in January, the FDIC, the Fed, the OCC, which is like the primary banking regulator, kind of like the who's who of financial regulators in the US, basically came out with a statement just, months ahead of the banking crisis, saying, look, holding crypto assets as deposits is incredibly risky. Implicit that banking crypto companies in general is very risky, doesn't follow sound banking practices. I think, wink wink, we all know when a regulator tells you you're doing something or might be doing something that doesn't follow sound banking practices, you don't argue. You kind of just say, that's the new policy, even if there's not a law around it. And so we saw a lot of traditional banks stepping away from the crypto sector throughout the year. And then we also, during the banking crisis, two of the banks that were went under were Silvergate and Signature, which not only were friendly to crypto clients, but actually operated their own infrastructure for the crypto industry. With Signet and Signature, and I think by like in 2022. Those platforms did something like 700 and 900 or billion like dollars worth of volumes. Like 900 billion worth of volumes, which is significant. They serviced clients like Coinbase, Kraken, Circle, and no one's really stepped in to take that. There's some banks, regional banks in the U.S. that have done some crypto servicing. There have been some European banks. We already know that certain large systemic banks do bank stablecoins like Circle, Circle's USDC. Coinbase has large systemic banking partners. So there is some sustained activity there, but it's definitely decreased noticeably just from conversations with people in the industry. And then, of course, you have JP Morgan, which Jamie Dimon was just kind of quoted saying, I think he actually testified saying that, crypto should essentially be killed or outlawed, I think were his words.
He would shut it down.
He would shut it down
in government.
And, this is kind of on the back of, I think the justification this time has been the links to Hamas terrorism financing, which, although somewhat disproved, and I'm sure as a journalist you have your own opinions on the linkage of the now changed Chainalysis, or
Yeah,
maybe it wasn't Chainalysis. I think it was the other competitor,
elliptic.
Elliptic. The now changed Elliptic report to a Wall Street Journal coverage of it, to Senator Warren's draft document that referenced the Wall Street Journal article, to now this proposed legislation that she's been shopping around Capitol Hill. And the provenance of the now changed facts and the corrections haven't made its way to Warren's desk, apparently. But so we've seen a lot of attacks, hostility, lack of engagement from some side of the institutional market. But on the other side, particularly large asset managers have been diving right in. And so BlackRock, Fidelity, Wisdom Tree, VanEck have been submitting applications for spot Bitcoin ETFs, which has been something that the market has really been clamoring for quite a while. And now there's an actual expectation that this probably will happen in January. The SEC has actually been, holding meetings with these players, which makes it look like they are just getting to kind of the final nuts and bolts of how this is structured. I think the current hangup is around whether it's Bitcoin settled in kind or in cash. But it looks like regardless, there will be like broader exposure through these large asset management ETF issuers. So we've really seen two things. But going back to your question on rates and macro, sure, like we've seen Bitcoin dominance increase a little bit around ETF hype. And a lot of people have sort of attributed that to the rally, but I would still, attribute most of the rally to expectations around, the Fed not raising interest rates, which seems to also be permeating through broader equities markets. So going back to kind of how I opened your last question, we seem to think we're different, but a lot of these things can be reflected elsewhere also.
Yeah, 100%. So just staying on the regulatory thread for a second, just how we kind of mused over this morning, right? At least from my perspective, the DOJ case, well, that was long rumored, right? There was going to be some sort of settlement between Binance and the DOJ. I had heard $2 billion. It turned out to be $4 billion. It seemed like everyone had that kind of, everybody had that hanging over them. And so once that was revealed, it almost was like everyone could take a deep sigh of relief that all the knowns were known, right? Which is the worst thing that you can have, is sort of unknowns. Now we know what we're dealing with, in a sense. We didn't know if Binance would be shut down, or if, what was going on exactly, which, if the largest market participant in your space could not exist, that just is going to make you, your risk tolerance is going to be a little bit different.
Yep.
But maybe just focusing on the exchanges for a second, this is kind of have been our bread and butter from a data perspective, looking at market share and looking at volumes and that sort of thing. Give us a rundown of the exchange landscape, and how sort of regulation, this DOJ case, impacts things. Like I said, we were talking this morning, and we kind of went through the playbook, right, of these offshore venues, which is, kind of, it seems to have taken the shape of don't KYC, grow a market, get slapped in the wrist, and then kind of rinse and repeat.
Yep. It's a good simplification, but what we've seen is, you mentioned Binance, so let's just start there. Binance actually started the year quite strong. I think post FTX, some of the largest players scooped up a lot of that market share, but they had a disastrous rest of the year. And I think a lot of people are really quick to point to regulation and some of the cases that was brought against Binance, but I really don't think that's the primary reason. What I see as the main reasons are the two big things that happened in February and then March, which is February, Paxos indicated that it would stop minting Binance USD, which is the stablecoin issued by Paxos, which white labels stablecoins. Paxos is arguably the most regulated stablecoin issuer, but wrapped on Binance is issued for Binance and branded for Binance. And so they announced they would stop minting Binance USD. The reasons are really around Binance was also minting.
And that was the death knell.
Well, so that was one. And what we saw is over the course of the year, Binance trying to incentivize usage of different stablecoins, as it had to move away from BUSD volumes. But the big thing was what happened in March, in my opinion, which is Binance ended a 9 or 10 month program that they had for zero fee trading across most of its Bitcoin, spot, stablecoin, and USD pairs. And we saw that Binance just gobbled up market share when they had this program because it was comparatively so cheap to trade on Binance because there were no fees on Bitcoin pairs, which is definitely the most liquid pairs on any exchange. And they ended that in March. And, just looking at the data, your guess is as good as mine, but that's when we started to see Binance market share really tumble. And that in conjunction with Binance's stablecoin, which had been incentivized through zero fee trading through this program, now, becoming virtually non-existent, Binance, now didn't have a good mechanism to implement some of these programs to regain market share. So it first tried with True USD, and then there was an issue because True USD, their custodian Prime Trust went bankrupt. So then it moved to First Digital USD, which also just I think people were generally sketched out about. It had almost no track record and very not transparent. And Binance was trying to sort of game, tilt the scales in favor of these stablecoins by doing zero fee promotions for these different stablecoin pairs. But ultimately, what we saw is just more and more trading started becoming denominated in Tether. And so Tether is by far the most dominant stablecoin across exchanges primarily, but also it is the largest stablecoin. And so a lot of the BUSD, FDUSD, TUSD volumes sort of converted into Tether volumes. So we've seen that on Binance. But Binance is also just, I think due to some of the regulatory pressures, is less attractive of a venue these days. So in some, there are like a myriad of reasons for why Binance has seen a decline. And so who's actually kind of picked some of that up? I think a big winner has been Coinbase. It's definitely a smaller exchange, but I think there are elements to where a lot of people see the future of Coinbase being a lot stronger now because, we're in this world, and this is going back to our conversation earlier a little bit. Now that we're in a post FTX world, Coinbase seems like the venue, particularly like the US focused venue, that has survived. And not just survived, but it's really innovated this year. It's crushed really the three main dominant themes that we talked about: layer twos, launching Base, ETFs, BlackRock announced that Coinbase would be the custodian. 9 out of 12 of the new filings list Coinbase as a custodian. And decentralized social, which we haven't talked about yet, but the kind of marquee decentralized social app has been Friendtech, which is built on Base. So Coinbase has sort of emerged from this very well. And also, going back to the actual impact of that $4 billion fine, I actually don't really think that's going to cause too much of an issue with Binance Binance has been doing proof of reserves for, over a year now. And I don't think people are really concerned that like, oh no, they're going to have this hole. But what it does is it disincentivizes new players to replicate the Binance playbook of flippantly disregarding KYC. Because now okay, we're probably not going to be able to take
it can get bad.
Exactly. We're not going to be able to get as much market share. The SEC, DOJ is going to crack down quicker, and maybe it's worse. And on top of the fine, no one wants to spend time in prison. So I don't think anyone is going to
or house arrest.
Exactly.
Or house arrest.
So there's still definitely a massive market for the international exchanges, but I think Coinbase can feel a little bit more comfortable in its presence within the U.S.
They're on a more equal playing field. I think that's why you saw a lot of juice in coin, was because it basically the Binance settlement basically puts these international exchanges on a more equal playing field with Coinbase, or put that the other way around. Coinbase is now on a more equal playing field. Okay, I guess one fun way to maybe close things out. You talked about one winner being Coinbase. I think it's fair to say Binance is one loser of this year. Maybe give us your top three winners of 2023 and your top three. Might be putting you a bit on the spot with the losers. I don't want to get you in trouble with anyone, but
losers.
Let's try to. We'll try to be. Yeah, they're losers. Losers might be a bit strong, but you can also talk about. It doesn't necessarily need to be a company. It can be sort of like a category, like maybe.
Yep.
I think I'm gonna front run your answer here. Maybe NFTs were a big loser in 2023. So I'll give you the option of categories or specific entities as well.
Cool. That's a fun question. I think the first winner that comes to my mind is, we actually didn't get to it, but Solana, which, we talked about the modular approach, but we never really talked about, the integrated approach. And Solana got blasted over the past few years for things like network outages. And then it was, I think probably overly connected or seen as connected to all of the FTX drama. And so from just like a technical price level, it obviously had a lot of room to grow in 2023. But they also did a lot of work on upgrades to their broader technology stack. That has dramatically reduced. I don't think there's been a network outage in the past 6 months.
I think that's a really great point. It's been a whole year. So 2023 was the year of no Solana outage.
Yeah.
Which is pretty good.
Time goes by fast.
It does.
But yeah, and I think there's also been this meme around kind of like only built on Solana, where the difficulty of Solana, I think in many early ways, was a headwind, but it's become a tailwind because you don't have this, let's fork a Ethereum app and build it on Solana, which you kind of do have on other L1s. You even have that on Ethereum a lot. But you have people who've actually, built in the SVM and have built applications that make sense and are unique to Solana. So, one of the other protocols that recently launched, their token is the exchange aggregator, Jupiter. And what's really interesting there is the way they are able to kind of aggregate liquidity in a way that you kind of can't really do on other networks. And so I think there's a lot of interesting developments happening on Solana, and that's driven a lot of people to now use it, but also speculate using it. So I think Solana has a lot of like positive flywheels and has really like been a big winner this year. Just in the sake of brevity, I'll give one spot to Coinbase as well. I think we've both kind of walked through some of the reasons that they've kind of crushed it this year. And
So now you have one more to pick.
yeah, I think I need to pick someone, slightly outside of crypto for this last one. So I'll go with the CME because we actually saw them overtake Binance in terms of futures volumes, which is a pretty noticeable indicator of institutional adoption. The CME has been servicing the Bitcoin space for quite some time now. So I do think it was a positive development to see a lot of activity happen on their more regulated futures venues.
Okay, now losers. Are we going to put Binance in there? I feel like you actually wouldn't put them in there because they're sort of, more in a middle ground, or maybe you would.
Yeah, I think we'll leave them out for now. They're kind of a stagnant.
Okay.
I think one loser we haven't really talked about is Circle. So one thing we saw with a reduction in stablecoin supply is a lot of that was kind of leaked away from USDC. I think a lot of people like to cite the brief depeg in the banking crisis, but really the main reason, in my opinion, is USDC holders are primarily American or have greater access to US financial markets. DeFi yields on USDC are comparatively less attractive than they were, 2-3 years ago, given just what treasuries are. And so while we've seen a lot of speculation and asset prices doing really well, markets starting to recover because people expect inflation not to, or rates and inflation both not to skyrocket. The fact that rates are sustained at a high level is a massive headwind for USDC when the comp is, using something like a DAI.
Yeah, when the risk-free rate is, yeah.
Yeah. So DAI could also be a bit of a winner, just given, they pivoted to RWA as collateral, which has been really interesting. So USDC is definitely not done quite as well as its peers. So that's definitely one example. Let's see. I think the Wall Street Journal, another loser. I think this Hamas, kind of somewhat questionable piece was, there was, I was kind of following the journalist on Twitter, and there was kind of some odd exchanges and kind of lack of recognition of the facts that eventually kind of came out around the claims he was citing. So I thought that was, a little not great. And then the other thing was, I don't know if you got these notifications all the time for the FTX podcast they had. It was like Crypto's Golden Boy or something. Did you see those?
Mm-hmm.
It was just so nauseating. I was so sick of seeing those. So they took a step down in my book. Let me think. Who would be a third?
I guess it's all relative, right? So it's not necessarily no,
these are just power
circles.
Yeah,
exactly.
Yeah, no. I think one winner actually would be the stablecoin sector as a whole, because in a high interest rate environment, it's actually able to generate massive yields on its assets. And so maybe actually that's my third loser is stablecoin holders for, on the margin, unless you're using, certain emerging products, which actually some of these newer stablecoins have their own risks. But by and large, stablecoin holders are not getting past the yield that their issuers are earning. So big L for those sitting in stables.
If you were parked in stables, you're big L on your part. Well, George, Calle, thanks so much for taking the time.
Awesome. Thanks for having me.
Of course. And the Scoop will be back for you again with another great guest. Make sure to check out the report on theblock.co, and I'm sure we'll be tweeting it out as well. Just download that thing, give us your email, get the PDF, maybe print it out, staple it, get a bottle of Chianti or something, and just have a lovely evening with it. Thanks.